I know you're not a chip analyst, but Nvidia, I think everybody has to talk about it. Incredible weighting on the major indices and also on sentiment overall. As you're talking to clients and you're looking at portfolios, how do you view this report and this possible inflection point?
It certainly is a bellwether, and it's one of the things that's injected a little bit of volatility into the short term. Things like Nvidia or on the economic front, inflation are metrics that if they come in a little bit better or a little bit worse, seem to inject some short term volatility. But it's part of a longer term trend, and Nvidia is part of that move towards a lot of CapEx spending, as you were talking about earlier, and a trend towards productivity in the economy, both of which we think are very positive trends for earnings going forward.
All right, speaking of earnings season has been really strong. EPS 8% above expectations, according to the latest read from LSEG. But after Nvidia, earnings season's kind of over. I want to get your take on the Fed influence on the markets and specifically the most recent comments from Fed Governor Christopher Waller, who was on our air yesterday.
I don't think there's a lot of upside risk. And like I said, things could change and rate hikes could be on the table under some scenarios in the world. But right now, I don't see that as the case. More likely we stay where we're at for months. And then if we get enough data going the right way, then we can think about cutting rates later this year or beginning of next year.
All right, Robert, so you just heard what he said, basically saying it doesn't make sense just to cut and wait and see. What's your take on that? Do you think that's one of the reasons that we're seeing futures lower right now?
I think the market and the Fed have had a little bit of a different interpretation on inflation. So the market's gotten comfortable with the fact that inflation's not headed higher, and the Fed's still in the mode of not being able to cut until there's a credible path until 2%. So there's a little bit of a disconnect there. The good news is that the tail risks have mostly been removed. So with the latest inflation numbers, we're starting to get a bit more comfortable that you won't see inflation tilt higher. And that's great for both the Fed and markets. And so we've entered sort of this zone of stability, if you will, where inflation has been stuck a bit, but certainly not headed higher. Markets are interpreting that favorably, and the Fed's taking a wait and see approach on those numbers.
All right. I want to talk to you about some of the sectors that you're looking for opportunities in. One of them is healthcare. So I do want to ask you about this one. So healthcare is up 4% month to date as we've seen, a broader sector rally. Utilities are right behind tech right now. So we're seeing a bit of a change of leadership. But that 4% rise is kind of middling for healthcare. At the same time, we had a really good guest on the show yesterday, the chief digital officer of Sanofi. They're working with OpenAI. So that AI influence on healthcare is something a lot of people have been talking about. Why are you bullish on healthcare? Is it the idea that AI can help improve margins and things like that? Are you seeing something else when it comes to the sector?
That's certainly a part of it. And one of the reasons that we were attracted to the sector is for margin improvement. So we've done a lot of work recently showing that sectors and industry groups that have seen margin improvement are the ones that are seeing the best performance. Healthcare turns up in that type of screening. And you're absolutely right. It's the type of sector that is ripe for disruption, that has a lot of opportunity to extract some costs and increase productivity through the use of technology, whether that's AI or even on the robotics front. So there's a lot to look forward to there in terms of earnings potential, and we think that's one reason it's a sector to be interested in.